Good morning, everyone. Happy Saturday, November 5th. This will be our third installment of SEC Reporting Analytics Live Querying. Today, we have a different dashboard we set up with our data set that you can find on Snowflake. If you go to our website, www.secreportinganalytics.com, it'll give you a direct link to a promo with Snowflake. If you're a new user, you'll get, I believe, up to $400 in new query credits. It's a very powerful tool and system. Lots of different use cases, lots of different users currently using our data sets there for many different reasons. They have a recently deployed Python enabler that allows you to run Python code to generate your own graphs and analysis, and really cutting edge analytics against these all the data that we have available. So please look us up there on the Snowflake Data Marketplace and sign up for the listing so you can get started. And if you need any help or assistance, we're always here to help as well. So with that said, I just want to quickly go over what we covered last time was market to book value. And in today's session, we're pulling in some additional metrics that you'll see here on the screen. And we will be going through and just analyzing different stocks and companies that are trading and their various different ratios and why they might be opportunities for investment. But in this case, we're looking at 2023 is the full year, the latest and greatest information that's available. We're looking across all industries right now. Any stocks between $5 and $100, and price to earnings anywhere between 0 and 1,000. So the very first thing I want to do with this data set is I want to take a look at, again, based on our last series, market to book value live query series that you'll find on our Google page, subscription channel. Let's take a look and see who's trading at the highest market to book value ratio right now. Looks like Booz Allen and Hamilton Holding Corp. Wow, look at that, $497 million on cash. That's pretty good. Book value about $8, but market price trading at close to $96, which leaves us, right around 11.73 would be the ratio of market to book. Earnings per share for this quarter, Q1 2023, is about 60 cents per share. That's fantastic. So the investors on the market are currently providing 162-time premium of 60 cents per share is effectively what today's market price, well, not today's market price, but the market price based on August 26, 2022. So that's a pretty significant premium to pay, but investors are pretty confident that this company will continue to be around. I think they've been around for, not really sure exactly, but I know this is a very historic company, Booz Allen and Hamilton Holding Corp. Debt ratio is about 0.82, which is pretty good. So pretty good investment opportunity, symbol BAH. Let's take a look at who's trading with the lowest. Oh wow, look, NextGen Healthcare trading at 1,000 times their earnings per share. So investors really giving this a high premium there on the earnings. So probably a company that they're looking that will be operating for a long time. So, and that maybe they have a product that they have a niche market on. But there's various different reasons. The ultimate goal here for us is to identify companies, again, that are over or undervalued, but then take the next step by going and looking at the 10K and the 10Qs that have a whole bunch of information about the goals of the company, the operating performance of the company, the risk of the company, the products, the executives. It gives you a really great understanding of what this company does and what their long-term goals are. So again, this is really just analytics to help us hone in on companies that we really should be going further in our analysis as investors to really understand what these companies do before we invest our hard-earned money there. TJ Maxx got about $4.2 billion in the bank. That's amazing. TJ Maxx has been around for a long time. This sounds about right. Trading currently at 4 times the book value. So yep, that looks pretty good. And currently 310 times the earnings. So not too bad. Could be looked at as a safe investment. TJ Maxx does a lot of different brands, high-end brands that they somehow get for cheap and are able to pass that savings off to their customers. So they've obviously built a loyal customer base, and it goes to show by the cash they have in their bank and the way investors are trading the company. So maybe an opportunity especially if you're someone who shops at TJ Maxx and you love the brand. That's another great factor and reason why you want to invest in something. Let's take a look at, if I were to sort on low to high, look at these. Oh man, because these are trading at a loss. So these kind of are loss per share. So these are negative numbers, but there's still market price is still pretty high, even though earnings per share is a loss. So cash liquidity ratio, Podgy Enterprises. I mean, this one has a book value of $30, trading at 42. Might go down a little bit, closer towards its book value in the short term before it picks back up. Maybe a company you want to look out and keep an eye on. Let's see, Guess Inc. is trading at losing some money right now at $18 per share on the market, losing about 4 cents per share. So Guess is a company that's again been around for a long time. 147 million bucks in the bank. Not as great as TJ Maxx, but there are a single brand, Guess Inc., that does have a following. So something to keep an eye out on, and potentially is an opportunity there for you. Let's see, we've got Educational Development Corp. Currently got 4.2 million in the bank, trading at a loss. Market price only $3. Book price is $5. This might be a great pickup, depending on what their actual core curriculum is and who their market is. It could be a great opportunity to look into, especially for $3.20 a share. That's less than sometimes the price of a cup of coffee for a share. So definitely keep an eye on this one. Take a look at their 10K, their 10Q, read up on who they are and who their executives are, and maybe an opportunity for you to invest and make great return in the near future or even the long run. Let's see, Vista Outdoor. They're currently trading, wow, $2.16 per quarter per share. That's amazing. And a pretty low price to earnings ratio, which is really good. Well, comparatively, it looks pretty interesting there. 0.49 debt ratio, market to book value 1.36, which is pretty low. Could be another great opportunity. Outdoor companies always have a following, a brand, people that love the outdoors. I mean, obviously COVID had a great impact for people wanting to go outdoors because we all were indoors for so long and we wanted to get out into the nature. So I think that trend will hold up because nature lovers, once you are one, it doesn't go away. So COVID's created a lot of nature lovers, and I think that will continue to grow. I'm still here. All right, so let's take a look at some other ones down here. Actually, I want to take a look and see who's got the most cash on hand. It's always important. TJ Maxx, top of the list. Second up is Flex, 2.6 billion. Currently, market price is $18. You know, pretty good market to book value, pretty low compared to others, in line, if you will. Price to earnings, you know, again, pretty in line with others. I'm seeing a couple at 162. This one's trading at 44. Not sure what Flex does, but you know, debt ratios 0.79. So, you know, they're not over leveraged, but they have a little bit of room to get to that, you know, one, which means for every dollar of assets you have a dollar in debt. But they're a little lower than that. So for every dollar in assets, they got 79 cents in debt, which, you know, depending on what they're doing with that money and depending on the interest rates, could become an issue for them. But keep an eye on Flex. Take a look at their 10K, their 10Q. Check them out. See what they're up to, and it may be a company you're looking to invest in. Who else we got here? Signet Jewelers. Almost $1 billion in the bank. Symbol is SIG. Market price $68. Market to book value 1.75. Earnings per share about $2. This is a pretty good company. Titan Machinery, 588 million. Pretty low market to book value. Pretty average price to earnings. Pretty good debt ratio, only 41 cents in debt for every dollar in asset. That's pretty good. Earnings per share 79 cents, and you know, that's very good. Definitely a company I would like to keep my eye on. See which way they're moving at $31. It's a pretty evenly priced share to get into. Here's Movado, the watch company. There's Guess down here. So there's a ton of opportunity here, and we can even go in, and if we really wanted to compare like for like, we can select an industry here and only show companies that are manufacturers. So when we're looking at the market to book ratios, and we're looking at the debt ratios, and we're looking at the price to earnings ratios, we're really looking at companies operating, you know, within the same industry. So it gives us a better feel of outliers. So in this case, Loop Industries trading at 8 times book value, but all the others are pretty low. So, you know, what does that tell us? That tells us that, you know, this company might be overvalued right now in the market, right? The market might be overvaluing this thing, but they are trading. They do have 38 cents per share. You know, price to earnings is 16. Cash flow liquidity, plenty of cash on hand to support operations. Might be a company we want to look into, Loop Industries. So again, I just wanted to go through quickly, you know, this new dashboard with you guys. Obviously, we're just starting out here. We are open to suggestions on other sorts of insights you guys might want to see with our data set. We could certainly come up with some custom shows, if you will, for you guys. Feel free to drop us a comment, give us a like, give us a shout out, share our videos, tell others about it. You know, we want to be of value to you all, but we certainly are not investment advisors. We're data providers, and so that's what we do. We live and breathe our data, and we make that data set available to you for your own analysis, because everybody's investment criteria is different. And we give you some of these tools to help you guide through the data and really understand what we're looking at. We hope you find it valuable and useful, and you tell others to sign up for their own access. If you have any issues or concerns, please reach out to us. You can find our contact form on our website. Thanks again. Have a great week, and wish you guys well. Cheers.